We have got banks collapsing, American dollars under attack, and a looming recession. What is going on, and how do we step back and think about this moment? Ray Dalio recently said that the biggest issue in a recession is more spending than we have income. He is likely that the SVB bank failure will be followed by many more problems before the contraction phase of the cycle runs its course.
I was asked to share my thoughts about the Silicon Valley bank situation. I want to convey that it's very indicative of what the whole economy is like. So there's its particular situation and the Fed coming in and guaranteeing all depositors. But it's a common situation. It exists pervasively. And what is it that I'm talking about? That there has been a lot of creation of debt to make investments.
In this video, I will tackle his billionaire economic insights about the USA collapsing and what he does that made him a lot of money in the financial crisis. USA current economy situation. Ray Dalio is one of the most well-known macroeconomic investors and one of the best hedge fund managers in the world. He started Bridgewater Associates in 1975, and Double Time built it into the largest hedge fund in the world. When Dalio speaks, the investment world listens. He has recently reappeared in an exclusive interview where he gave his updated thoughts on where the current economy stands and where we are in the short and long-term debt cycles where he believes the markets are heading over the next few years. Where are we? It is the first time in the current hiking cycle that staff economists have forecast such a recession. The Signature Valley Bank collapse was the second largest bank failure in American history, and it had to bear the worst banking crisis since the Great Recession. The bank, which had over $200 billion in total assets at the end of last year, primarily provided banking services to venture-backed technology companies. The turbulence in the technology industry meant many customers were burning through cash and taking out their money at a faster pace. The fallout from the recent banking crisis is likely to push the American economy into a mild recession later this year. There has been a lot of debate that the American dollar might lose its status as the most used currency. Most people right now are worried. Will the American dollar lose its dominance? What is a reserve currency? A reserve currency is a type of currency that a country will keep in its central bank, and the whole purpose of it is so that it can buy things with it and pay off debts. Let us pretend that you had two close friends. Steve has an almond bar, while Liza has a chocolate peanut bar. Now, Steve wanted to trade Liza his almond bar for her chocolate peanut bar, but there was a problem because Liza did not desire the almond bar. The almond bar is not popular at her school. So what Steve could only do was trade his almond bar for a dark chocolate bar and then exchange the dark chocolate bar for the chocolate peanut bar he likes. Just like chocolate, it operates the same way with money. Some types of money are more popular and easier to trade with. That is why some countries use certain types of cash as their reserve currency. It is like a typical denominator candy that most will use. Now back to the adult world. The current reserve currency of the entire globe is the American dollar, and you probably already know that. But did you know? In fact, that central banks currently hold about 60% of their foreign exchange reserves as dollars and many transactions. If cash is relatively attractive means the bull run is over. Is this becoming clear that we are well past the top of this economic cycle?
There's a cycle. There's a short-term money, credit, debt, market, economic cycle. We call it the business cycle also. And what happens is, you go from a recession, growth is slow, inflation is low, central banks produce a lot of money and credit. It's stimulative, it's like creates that. Credit turns into debt. Debt is something that has to be paid back. Credit is something that's stimulative, it gives buying power, so it starts to create a cycle.
And that we are experiencing the contraction of the economy. In the last 10 years before COVID, the economy was booming where interest rates were down, unemployment was low, and money was cheap to access, which created economic expansion and optimism in the economy. But in 2020, we had a big shock to the economy. We had more friction between political parties, and the Americans changed political leadership. According to Dalio, a recession is not a bad thing. How? He thinks that this type of depression is not inferior. It is less terrible than he thought it would be because it's distributing and shrinking that credit. At the same time, we have a real issue with the United States world debt because we're selling all this debt. If you look at wealth instead of GDP, wealth is a much indicator of things. GDP is like looking at revenue and how much you sell. We have borrowed more money, and now we have a problem selling that money around the world. And where it's also happening that this political and geopolitical situation is weakening the demand for American bonds. The good news is that this depression is not as bad as the value anticipated. Still, Dalio is concerned that these issues around the American national debt, the current deficit, the debt ceiling, and the weakening demand for American bonds are becoming a problem. Ray Dalio's changing world order. The United States has been a superpower for about 100 years today. Ray Dalio cites several factors, including high debt levels. While the United States does have high debt levels, the American dollar is still considered a haven asset. Ray Dalio shares his story of learning to anticipate the future by studying the past. In 1971, when he was a young clerk on the New York Stock Exchange, the United States ran out of money and defaulted on its debts. You heard it right. Once in a while, the US ran out of money. It is because gold was the money used in transactions between countries. Paper money, like the dollar, was like checks in a checkbook in that it had no value other than it could be exchanged for gold, which was real money. At the time, the United was spending thousands of money than it was earning by writing more paper money checks than it had gold in the bank to exchange for them. As people turned these checks into the bank for gold money, the amount of gold in the United States started to dwindle. Soon it became that the United States couldn't keep its promises for all the existing paper money, so people holding dollars rushed to exchange them before the gold ran out. He recognized that the Americans would run out of real money. He expected the stock market to plunge the next day, so he went to the exchange floor early to prepare. Then surprisingly happened, the market rises nearly 25%. That surprised Dalio because he did not experience a currency devaluation before that time. So he dug into history to learn about it and discovered that the same thing happened in 1933.
And through this process, the three main players or three main types of players are those who I'll call borrower debtors. Is it economic to borrow and be in debt? Or lender creditors? Is it economic to be a lender creditor?
Ray Dalio investing advice on the SVB collapse. Assets acquired on borrowed funds have lost value, and the Silicon Valley Bank collapse is expressive of a global problem. In his opinion, we should be well diversified. This is what he calls the holy grail of investing, which is to have 10 to 15 good, uncoordinated return streams. He said, hold a well-balanced portfolio that holds assets that do well when there are productivity gains, equities, especially those that produce benefits from new technologies that leap in productivity, and that do well when there is a devaluation of money. How Ray Dalio make more money in a financial crisis? Ray Dalio says what is behind making a lot of money during the financial crisis because he understood what happened in the Great Depression. He shares that he looked at three major forces that are happening now that have not happened in our lifetimes. And the last time they happened was in the 1930 to 1945 period. And those three are the creation of printing a lot of money to pay for the debts we needed to at the time, but it was overdone. Where would they get the money from? The government borrowed the money. Who did they borrow the money from? The Federal Reserve. What they did is the Federal Reserve prints the money and they buy the debt, and that's how it works. So now everybody gets all these checks, and everybody's happy because they get all these checks, but when they get all this money, they spend it, and everybody's surprised they got inflation. We have increased the amount of money by 25% or more. What has happened? The price of anything is equal to the amount of money and credit spent on it divided by the quantity of it sold. When you increase the amount of money and credit buying power, spending by a lot more than you increase the number, you get inflation.
So, for example, banks, insurance companies, They borrow money at a certain rate, and then they go out and they make investments. And when those investments have lower returns, go down in value, as stocks and bonds have gone down in value, or they don't have adequate yields relative to the cost of funding those assets, you have everybody losing money.
Instead of worrying about what's coming, we should prepare for when it comes. The market always recovers, and we've seen this repeatedly. Just take the 2008 financial crisis, for example. The market eventually bounced back, and although it took some time, it did recover. Instead of being paralyzed by fear during tough times, we should focus on making clever investment decisions and positioning ourselves for long-term success. By doing so, we can weather any storm that comes our way and come out stronger on the other side. Ray Dalio was a global macro investor, betting on how the world's going to go. The upsides were a lot bigger than the downsides, and he had been doing that for 47 years. That was a painful experience for him, but he learned a principle that he would build a habit to change his life. Pain plus reflection equals progress, because what it is a habit, and you get your attitude from cues. If he has a painful experience, he views it as a puzzle that needs to be solved, which is, how reality works and how he would deal with it better in the future. Most important principle for investing. ChatGPT asked Ray Dalio about his view on the essential principle for investing. He explains that this is what he calls the holy grail of investing, and that's about diversification.
I was asked a question from ChatGPT. Interesting. So, I'll tell you, although I suspect you probably can get an equally good answer from ChatGPT. The most important principle is about what I call the holy grail of investing, and that's about diversification.
In a nutshell, you can get 10 or 15 good uncorrelated investments. You can reduce your risk by up to 80% without reducing your return. That means you increase your return to risk ratio by a factor of 5. Risk reduction is a must, so know how to diversify well in 10 or 15 investments. If you can do that, you will make a fortune, because making a fortune is not just a matter of the upside. It eliminates or reduces the downside, so you continue to play the game. Most people think that the way you make a lot of money is to come up with the best single or few bets. That is wrong. Ray Dalio on winning this crisis. First, be financially strong. Have a good income and balance sheet, and think about how many months or years you could live if you didn't have an income. The more financial security you have, the more maneuverability you have to protect yourself on the downside, take advantage of opportunities, and know how to achieve a balanced portfolio. It is essential financially, and then be with people, your community, the source of happiness. Psychologists have studied that above a basic income level is not a source of joy. Community is the highest ranked happiness source. Meaningful work and meaningful relationships are productive. I thought of paramount importance, and then also to realize what the risks are, and do you understand those risks? As Ray Dalio once said, for every mistake you learn from, you will save thousands of similar future mistakes. So if you treat mistakes as learning opportunities that yield rapid improvements, you should be excited by them. But if you treat them as bad things, you will make yourself and others miserable. You want to be self-sufficient, and you can get to be strong sometimes. Get through these things fine. Just understand what it's like and navigate that well. Did you learn anything a lot from today's video? Remember to subscribe for more and share it with your family and closest friends.